Morning, Shane.
G'day, Chris. How are you today?
I'm well, mate. I'm well. It's been a big month.
I feel like they're always big months at the moment. What's happening?
What's the most interesting thing you think you've seen in the last 4 weeks?
Well, I'm going to try and narrow it, Chris, because there's lots, but we'll touch on Iran. But I saw some data the other day which spoke a little bit about the growth we're seeing in the US S&P 500.
Yep.
And, you know, in the back of my mind, I sort of think to myself, all these geopolitical issues are real, but yet the Dow and sort of S&P 500, not so much the Dow, the NASDAQ and S&P 500, continue to defy the odds and keep rising.
Yep.
And the stat that I read or saw, Willis Towers Watson were kind enough to share this, is that earnings growth, now bear with me while I explain this, earnings growth is outstripping share price growth on the Magnificent Seven. So the AI stocks, so I'll say it again, earnings growth has been higher than share price growth, which is a real anomaly, right? Because typically speaking, we see share price growth supported by earnings growth. And the stats, broadly speaking, is that the opposite can be said for the rest of the S&P 500 companies. Earnings growth is lower than share price growth.
Yeah. Well, that's pretty typical, right? In terms of, you have earnings growth, you release it, therefore the market expects that earnings growth will continue and grow, therefore share price grows more than earnings. Yeah. So there's this, you said
and we pay for it as investors, don't we?
Yeah,
that's what we're happy to pay for.
Yep.
And then I guess that's the thing that we kind of scratch our head about is like these companies, NVIDIA as an example, how far can they run?
Yep.
At the moment, earnings growth is higher than share price growth, which I find
fascinating, isn't it?
Extraordinary, right?
And especially considering the context of a lot of the conversations we were having maybe 8 to 12 weeks ago, whereas are we in a bubble? Like, is AI, is this real? Will it continue? It's a fascinating stat.
Yeah, and it probably is a comforting stat in a way, right? Because, when we have got, issues in Iran still, and I think that's the other interesting piece of news that comes out of the month is that nothing's really changed from last month. That, the ceasefire gets kicked down the road a bit further and inflation bubbles up, consumer confidence sort of moderates, oil price moderates a little bit, whatever Donald Trump tweets, the share markets and oil markets and, confidence responds accordingly. But all the while, AI stocks are just taken off.
Yeah. And it's really lifting sort of the recovery essentially, and we touched on this last month. It was interesting to say, like, if those who go back and have a look at the pack, that's kind of really what's been masking essentially is what we talked about, what's been happening in Iran.
Luke shared a stat the other day, Chris, and I don't know how, I haven't fact checked this, so I'm going to give him credit for it being real. So it may not be real, just putting it out there. But he said there was around this, the development of AI over the last 12 weeks has been equivalent to that in the last 3 years.
Yeah, it's crazy.
So this kind of curve of development is just happening faster and faster. And I think that's an interesting, reflection when you see earnings growth, outstripping share price growth, and I still don't feel like the AI companies have fully tapped the earnings potential in these things because they're kind of giving it to us for free at the moment.
Correct.
Use it. We get embedded into it, and then the price rises will come.
Well, as we were having that exact conversation internally within the office, that inside 6 weeks, it's critical in terms of how we operate and create efficiencies and speed. And once you have that, how do you, you're hooked up, how do you say no?
Yeah. Oh, that's right. It changes your life. And if it can be positive. And, as we talk about, I mean, a lot of our listeners or people who come into office are sort of curious, somewhat scared about AI, what it can do. I think it's safe to say that no one really knows, right? Like, I know I'm as excited as I am terrified about what AI can do.
Correct.
But, from an investment perspective, I feel very lucky that we've had this little run because it is definitely masking what would otherwise be potentially a more protracted share market, decline.
Yep.
Based on the conflict in Iran.
And for me, like if I was to think about, or what I was thinking about before coming into today, what's been the most interesting thing for me, and it's about looking through, I suppose, what's going on in the market and trying to understand, what's the more protracted impact, because as we talked about last week, last month, we were on the edge of that sort of contained conflict. We're now bleeding into it being prolonged, and we're now a month down the track, so it's even further prolonged, we were worried about potentially having those inflationary impacts continue to embed into the rest of the economy. We're getting into that stage now where that effect could start to play out to a greater degree.
Yeah, look, I think it's it's a real factor, isn't it? Like originally, our research from Willis Towers Watson was sort of showing that we might see 6 to 8 weeks of contained conflict.
Yep.
Now it's like material disruption is we're probably
there.
I feel like we're living it now.
Yeah, we are.
We're not being told that that's the case. And probably the only thing that's helping is this ceasefire. I think it's just like a genuinely kick it down the road.
Correct.
Try and get the Strait of Hormuz opened again, and try and get some movement. But you know what? The thing that's fascinating to me about this is Donald Trump's calling the shots from the US, but they're not suffering an oil crisis in the US, right?
No.
They've got more than enough to, they're probably profiting out of the fact that the oil price is higher, right? So there's some parts of that which I feel the rest of the world are definitely more exposed. And I'd be interested to your views on this, Chris, in regards to Australia. We touched on it last month a little bit about how Australia is more sensitive to higher oil prices and higher interest rates. Here we are a month later. We've had now a budget that's been released as well.
Yep.
How do you see that for Australia, share market wise, and just underpinning the economy that's out there?
Well, all it does is induce or create more uncertainty. So especially like your budget, I think we've come out pretty strongly in terms of how we feel about it. And anecdotally, I continue to talk to clients, and it's not really making people feel more certain about their wealth creation strategies or how much money they're going to have in their pocket. And then you add, we've got oil price, we've got geopolitical conflicts. It doesn't engender huge amounts of faith. Now, what that from a psychological standpoint, from a market perspective and consumer sentiment, it fell off a cliff when all this happened, and it hasn't bounced, and I'm not surprised.
Yeah. Well, there's no reason for it to bounce, is there? Like, there's nothing that's come out yet that says, the conflict hasn't finished.
Yep.
We had a slight, easing in inflation the last read, which was, a little bit, but still above 4%. So it's not to be jumping from the rooftops and saying how good's this? We've
not at all
cured the problem. It's actually still very much alive and real. And the oil price hasn't really impacted that inflationary read just yet at all.
We're in that. Yeah, kick the can down the road is a perfect example. We're almost, like the analogy I feel like you're sort of sitting in a lifeboat in the middle of the ocean and just waiting for the elements to kind of wash you whichever way it feels like it's going to happen.
One way this way, next day that way.
Yeah, correct. Yeah.
And it is hard for consumers. And I think, we've had the benefit of probably anecdotal evidence from speaking to a lot of clients over the last few weeks, obviously market related, Iran, but the budget has been, I've never seen a response to a budget like I've seen this time around.
Yep, it's been a long time.
And I don't know how your sense of it's been, but the overwhelming message that I've had is people feeling very unhappy about, even if it, like people even that aren't impacted by it have been frustrated by this budget. I think there's a part when, a political party shifts too far to their preference, or they tell you something and then they do it the complete opposite afterwards. There's a bit of a trust that's lost in that process.
Absolutely. And well, I think the long and the short is, however the government have come at this, they're trying to equalise the tax base, essentially, from employers to a wealth tax. The overwhelming view, which is correct, is that we're all going to pay more tax on wealth. And who is ever happy about that?
Yeah.
So,
But I think there's also a part too, Chris, around this is that the impact of this budget, which has not hit the headlines really, like the Reserve Bank have been very open about this in that the government's running a very inflationary, very fiscally irresponsible in some respects. So fiscal policy is very much inflationary. And I mean, reading between the lines, if they're raising something between like $80 billion in extra tax on capital gains tax and trust tax, there wasn't a quick runway back to being in surplus. So that money is all going to be spent on handouts. And I would absolutely guarantee this is that the next budget and the one after leading to the election, all the cash they've just taken away now will be distributed out on bulk.
Correct.
And the thing that worries me about that mostly is that that's very inflationary, and we haven't got inflation under control.
No, not at all.
Today.
Yeah. And there's very little, like the government has very little power in that respect, in terms of like a lot of the inflationary elements at the moment are global. So we're importing a lot of that inflation into Australia. So they can do what they want to try to, I suppose, but you've only got so much leverage and so many tools, and the RBA's only got so many tools. Well, they've got one tool that they can use to do that. And then you're right, like this was the budget that they needed to get aggressive with, and they've got two more to quote unquote repair the damage, which is going to look like, as you said, handouts, right? So it's just uncertain, and that gives investors less confidence to go and invest or make decisions. Yep.
Hey, here's a random one for you, Chris. I'd be terrified about the response in some respects, but anyway, here goes. One Nation. If I'm reading correctly, the polls today, if we go into election today, they may actually have enough to form a minority government right now. Yeah, I think that worries me a lot. I think the one thing that gives me some solace here is that we are 2.5 years away from the next election. Yeah. I don't think it would be a great outcome for our country if Pauline Hanson was our leader. Do you think the shift in the opinion polls to One Nation is a backing of their policies, or is it a protest against?
This is a protest against the major parties.
Yeah.
Yep. There's no, everyone's quite emotional at the moment. So, as a human species, we're going to have an emotional reaction and go, well, you know what? Stuff you. Like, I'm going to go with this person over here. And the Liberals have done a fantastic job of just making themselves redundant politically in this country. So, what's the alternative?
It's funny, isn't it? Liberals somehow in this process of the budget being announced, they've become less popular.
Yeah.
So it's like they've done nothing here and they've become less popular. So they need to, essentially stand for something once again, because they don't at the moment.
It says how bad a job they've done when the population, or the electorate is the word I'm looking for, aren't happy with the incumbent, and you as the typical second, everyone's just overlooked.
Yeah. Right. Someone asked me that, Chris, and I said, we're talking about this very topic, and I said, I think the question was, who's responsible for kind of the budget and its sort of shift so significantly to higher taxing regime? And my simple response was the Liberal Party, because they gave their own internal issues, created a situation where no one really felt they were a viable option. Opposition. They lost on power. The first term, Albanese and Chalmers played a fairly centred approach to politics. Didn't really rock the boat too heavily. They got a lot of trust as a result of that. And the coalition didn't stand for anything. They had, Barnaby Joyce defected to One Nation from the Nationals and the Liberals, fighting with each other. They can't sort their own house out. Quietly, Labor Party take a majority and then come in and just go whack.
Yeah,
you've given us the mandate.
We've got the mandate. Yeah,
we're doing what we want now.
Yep.
And I agree with you. A view about One Nation now is it's kind of people are just jumping up and down saying we need something other than what we've got. Today.
Well, it'd just be interesting to see how that plays out. I think over the next probably 12 months, really, because we've got a lot of legislation coming for. Yeah. I know they're trying to ram through the capital gains tax changes before the end of this sitting session. And then we'll see towards the end of the year. But I don't know that they quite understand the Pandora's box that they've opened on the trust side of the fence. Yeah. But we will see.
I sort of have because I agree. The trust side, we hear it from the view about the large end of town is benefiting at the moment, but there's 850,000 trusts in Australia, and a good majority of those are small businesses.
Yep.
So we could talk about that for hours, but I think the part that I feel a bit uncomfortable about at the moment is this idea that we'll just get negative gearing capital gains tax done before June 30. I mean, it is a massive movement away from where we are today. 2 days of public consultation they've provided to the Australian people. I just feel like it's a bit insulting in some respects. And the thing that I worry about mostly, I mean, you can kind of do the math on, is the 50% discount better than indexation? It's probably, depending on what asset you hold, it's not that significant. The two things that are significant, however, are a minimum 30% tax on all capital gains in the future.
Absolutely.
And secondly, the this kills the need or the desire for people to innovate or have a startup in Australia.
Yeah, correct.
There's no capital gains tax relief at all for a startup now in this country.
Yep.
And I understand the stats about, the majority of small businesses will still get the small business concessions. But, your first question today was, what was the most interesting thing that's happened in the last month? The AI boom is the most interesting thing that I think is going to happen not only this month, but for some period of time. And our government has just killed the idea of a business that could actually, go from zero to enormous to innovate in this country.
Yep.
They just will not do it anymore.
Yep.
And we already have productivity growth.
Yeah,
that's
well, that's
lacking.
what I was just thinking. Like this is the productivity part of it. Yeah,
this makes no sense to me at all. And again, I understand that the view is that we want the majority of people aren't impacted by this, but my understanding on the world is that we want people to be able to go out and actually make
correct.
put Australia on the map.
Yep.
By building something that's amazing. We can be data warehouses and things of this kind that are now, we've got the space, the capacity to do these things. But if you kill the ability for businesses to actually have any incentive from a tax perspective, they just simply won't. They won't do it here.
And I think it's not fascinating. It's not the word I want to use. I think it's just there's a word in there that's. I think it's crazy that in a period where we're probably going to see the most disruption and change and need, therefore, the most innovation over the next decade, that you put this in place where, you put people behind the eight ball before they've even started and disincentivize them to even go that way. Yeah. And the level of globalization and I guess technology is going to allow this to happen, across the world. Why would you come to Australia and do it? It boggles my mind.
Yeah, I completely agree, and I think if I can ask this question, Chris, and maybe just pivot a little bit about to how we think about this from an investment perspective. I mean, everyone that listens to us talk about this knows that we're evidence-based.
Yep.
We work in the data, we work in the historical information and use facts to make informed decisions moving forward. At this point in time, as an investment committee, we already have approximately 2/3 of a pure share portfolio invested or held globally, 1/3 in Australia. The less incentive you make to invest in Australia, we're a small part of the puzzle, so this is not necessarily flexing from our perspective at all. But the conversation that we will invariably have in the future is, are we better to decrease our Australian equity exposure and invest globally, which is a real, it really strikes at the heart of Australian investing.
Yeah, correct. Yeah.
I mean, this is what I'm just sort of scratching my head about, from why the policy is shifted. But then secondly, how we then respond to that in terms of what we think about for real outcomes for our investors.
And it's not just us. This is everyone across the board. So, it's... I've got some words, but I don't... Yeah, it's frustrating, I think.
And perhaps if I, think about something else that's very interesting happened this month too, Chris, is that, we saw... I think it was this month, but I'm going to say it was. Cochlear, CSL... two of our biggest and proudest Australian businesses get beaten to a pulp in the share markets. CommBank has come out openly and said we see headwinds for the first time in a while. And this all the while the S&P 500 daily hits a new record.
Yeah.
And I don't want to use the word bubble because I hope it just keeps on cranking.
Yep.
But, I just the differences of what's actually happening, again, going back to our view about data and stats, this is not our opinion. This is just factually what's happening.
Yep.
And I just think everything that's happening around it from back to consumer sentiment is not fueling let's bring Australia back up again. It's actually just making it further away from where it is.
Yeah, yeah. But at the end of the day, the adage, I suppose, that we always lean back on here is that that the evidence and what's the data saying, but then having the robustness to lean back on, and the portfolios are built in a really clear, transparent, I'm going to use the word again, robust way to allow us to build a foundation to make sure that we're making the right decisions, even though there's a whole lot of transformation going on economically around the world.
Yeah, I actually think that's the exciting part for investors today, because I mean, we probably had a bit of a negative undercurrent with our thought about some of the things that are happening, but from a portfolio landscape point of view, like things have been pretty good.
Yeah,
right?
they've been great, really.
Yeah.
Like if we go back and look at the last 3 to even 5 years,
Yeah.
portfolio returns have been fantastic.
Yeah.
Even though we've been through some really tumultuous periods and we've dealt with like high levels of inflation, we've dealt with global crises, we've dealt with pandemics, and you look at the numbers and we're like north of 10 a year. That's phenomenal.
It's amazing, really.
Yep.
And I think that's the opportunity going forward. And I think, where I don't stress too much about what a local government does in our country, because at the end of the day, our mandate is to find the best possible outcome and asset allocation for our clients.
Yep.
And, we're not constricted or restrained to investing domestically, as we haven't for some time.
Yep.
So the opportunity still sits for us. It's just more in terms
it's huge, isn't it? Yeah. The thing that I get a lot of comfort out of here too is the fact that we've got like Willis Towers Watson Global Institutional Fund behind us with all that research and all that intellectual property that then funnels down into our world is just such a key advantage over the rest of the marketplace.
Yeah, 100%. Well, I think last thing I was going to say, Chris, is really from a portfolio standpoint, despite all the noise and things, we haven't really made any changes in the last month at all.
We haven't.
Which I think is always the funnest part about all of these things, is that the noise happens and we stick to our knitting and stick in our lane and just let the portfolio not react to these short-term movements, but allow us time to digest, make an informed decision. And I think even still to the point about the budget, lots of people asking, what are we going to do different or how are we going to change it? And I know our immediate response is, well, nothing just yet. Until we see a legislative instrument, we're not going to change or try and speculate on what's going to be.
We're not jumping at shadows, evidence-led.
Yeah.
What's the evidence say? What do the facts say? And then we can make informed, rational decisions.
Well, let's hope next month we have this conversation that some of these things we're talking about are resolved, a la Iran would be a nice starting point.
Yep.
But until then, let's see what happens.
Okay. Thanks, Shane.
Bye for now.